Ever wondered if your crypto investments could be working harder for you? In the fast-paced world of digital assets, choosing the right platform isn't just about buying and selling, it's about maximizing your potential, minimizing your costs, and securing your future. Today, we're diving deep into a head-to-head battle between two Canadian crypto heavyweights, Nuggs and Wealthsimple Crypto. This isn't just another surface-level comparison. We're going to break down everything that matters to you in 2025, from fees you might not even realize you're paying, to the range of coins on offer, security measures that keep your assets safe, and the user experience that can make or break your crypto journey. Whether you're a seasoned crypto veteran or just dipping your toes into the digital ocean, this comprehensive guide will equip you with the knowledge to make an informed decision for your portfolio. So, buckle up, because by the end of this video, you'll know exactly which platform deserves your hard-earned crypto. Let's start with the big one, the elephant in the room for many investors: fees. Both Nuggs and Wealthsimple Crypto advertise themselves as low-cost options, but the devil, as always, is in the details. Nuggs prides itself on its no-commission trading. Sounds fantastic, right? Well, it is, to an extent. Nuggs makes its money primarily through a spread, which is the difference between the bid price, what you sell at, and the ask price, what you buy at. This spread is dynamically determined and can fluctuate based on market conditions and liquidity. While Nuggs claims to have some of the tightest spreads in the industry, it's still a cost you incur with every trade. They also famously cover the first $5 in network fees for crypto withdrawals, which is a nice perk, though it's important to remember that if network fees surge, you might be responsible for the remainder. So, while you won't see explicit trading fees on your statement, the spread is effectively your cost of doing business. Wealthsimple Crypto, on the other hand, is much more transparent with its fee structure. They charge a clear trading fee that varies depending on your account tier. For their core clients, the fee can be up to 2%. Premium clients see that drop to 1%, and generation clients enjoy the lowest rate at 0.5%. This tiered system is tied to your overall assets with Wealthsimple, not just your crypto holdings. So, if you have a significant portfolio with Wealthsimple and other areas like their managed investing or self-directed accounts, you could benefit from lower crypto trading fees. They also have staking fees, which vary by coin but can be as high as 30% of your gross rewards for core and premium clients, dropping to 15% for generation clients. Network fees for transfers are passed directly onto the user. So, who wins on fees? It's a nuanced answer. If you're a high-volume trader or have a large overall portfolio with Wealthsimple, the tiered fee structure for trading might work out to be more transparent and potentially cheaper than Nuggs' spread, especially if market volatility widens Nuggs' spreads. However, for smaller, infrequent trades, Nuggs' spread-based model could be more competitive, especially with that $5 network fee coverage. The lack of explicit trading fees on Nuggs' side can be appealing for those who prefer not to see a percentage taken off each transaction, even if the cost is still embedded. For staking, Wealthsimple's fees are a significant chunk of your potential earnings, which is something to strongly consider if staking is a key part of your crypto strategy. Next up, let's talk about the bread and butter of any crypto platform, the available coins. What can you actually buy and sell on these platforms? Nuggs boasts a significantly larger selection of cryptocurrencies. While the exact number can fluctuate as they add new assets, they generally offer a wider range of altcoins beyond just Bitcoin and Ethereum. This is a major plus for investors looking to diversify their crypto portfolio and explore newer, potentially high-growth projects. As of mid-2025, Nuggs has been actively listing new tokens and protocols, expanding its reach in the burgeoning Web3 and decentralized finance, DeFi, spaces. This includes popular Layer 2 solutions, emerging DeFi tokens, and various other altcoins that might not be available on more conservative platforms. Wealthsimple Crypto, historically, has offered a more curated selection. While they've been expanding their offerings, their focus remains primarily on established, larger-cap cryptocurrencies like Bitcoin, Ethereum, Solana, Cardano, Polkadot, and a handful of other widely recognized altcoins. They do support staking for a selection of these coins, which adds a utility layer for holders. Their approach seems to prioritize regulatory compliance and investor familiarity, meaning they might be slower to list new, unproven assets. For instance, while new, high-flying meme coins or obscure DeFi tokens might appear on Newton, Wealthsimple tends to take a more cautious, deliberate approach to listings. If you're a set-it-and-forget-it investor primarily interested in Bitcoin and Ethereum, Wealthsimple's selection might be perfectly adequate. However, if you're keen on exploring the broader crypto ecosystem, discovering new projects, and participating in the latest trends, Newton's more extensive list of supported coins will likely be a significant advantage. This difference directly impacts your ability to diversify and potentially capitalize on different market segments. Now, let's address perhaps the most crucial aspect of any financial platform: security. In the crypto world, where hacks and exploits can be devastating, robust security measures are paramount. Newton takes a multi-pronged approach to security. A significant portion of their customer crypto assets are stored in cold storage, meaning they are held offline in highly secure locations, largely mitigating the risk of online hacking attempts. They also rely on trusted third-party custodians for asset storage. Furthermore, Newton enforces internal security requirements, including mandatory password rules, internal security audits, and regular penetration testing to identify and fix vulnerabilities. They also have an insurance policy that covers custodied assets against hacks and theft. For their new Newton protocol and its native Newt token, security is baked into the architecture, with verifiable on-chain automation and secure agent authorization, employing concepts like delegated proof-of-stake, DPoS, and economic security through slashing mechanisms for validators. Wealthsimple Crypto also places a strong emphasis on security. They utilize two-factor authentication, 2FA, as a standard security measure, making it harder for unauthorized users to access accounts even if they have your password. They actively monitor transactions for suspicious activity, which helps flag and address potential fraud quickly. Like Newton, Wealthsimple holds customer crypto assets in trust in omnibus custodial accounts with third-party custodians, as well as in online hot wallets for immediate transfers. Their client account agreements detail their commitment to protecting customer funds against cyberattacks and fraud, drawing on their extensive experience as a regulated financial institution in Canada. With that said, thanks for watching, and until next time.